Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my North American opening market comment for July 28th. Well, the dollar was generally lower in midday trading in Europe as the data from Germany showed a better than expected fall in the number of unemployed persons and an acceleration in the month-on-month rate of inflation in Germany. Better than expected EU business confidence may also have helped the euro, which gained broadly. There aren't any major U.S. indicators coming out today. There are, however, a large number of Japanese indicators coming out overnight on what's Friday morning in Japan. These include unemployment, CPI, industrial production, and retail sales. Now, given the fact that the Bank of Japan, the BOJ, meets during the day, I expect that only the CPI will really be market affecting. The inflation rate, or more accurately, the deflation rate, is expected to slip further, adding to the pressure on the BOJ to act. Now, as the national CPI continues to show deflation, the bank's pledge to get inflation back to 2%, quote, at the earliest possible time, unquote, is beginning to sound as empty as Chiang Kai-shek's annual vow to retake the mainland. But doing nothing now would, in effect, be tantamount to admitting that monetary policy has reached its limits. That could dampen inflation expectations and really frustrate the Bank of Japan's efforts. On the other hand, the media are reporting growing concerns within the BOJ about the costs and benefits of their quantitative and qualitative easing, their QQE program, which basically consists of the BOJ financing the government's entire spending, excluding debt redemptions. For example, the average rate on new Japanese bank loans is now around 0.7%, 70 basis points. How much lower can it go? So what's the point of further easing or reducing interest rates further? Nonetheless, analysts are split fairly evenly on whether they think the BOJ will take any further action Friday, such as cutting rates further, deeper into negative territory, or increasing the monthly bond purchases. Now, Prime Minister Abe's main economic advisor, Mr. Honda, recently said in an interview that the BOJ should increase its annual purchases to 90 trillion yen from 80 trillion. So clearly that is still possible. My view is risk aversion has diminished considerably recently, and dollar-yen has recovered somewhat. That reduces the urgency for the BOJ to take immediate action. Moreover, the recent G20 meeting emphasized that, quote, monetary policy alone cannot lead to balanced growth, unquote, and that fiscal strategies are equally important. This is why I believe that the authorities will choose not to ease monetary policy further at this time, but rather focus on the huge fiscal stimulus package that they're planning on coming out with. If the BOJ doesn't take any additional action at this meeting, then I expect the yen to strengthen further. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.